Welcome everybody to our webinar this evening. My name is Darren Wagner and I'm the founder and CEO of DragonCharts. And thank you for joining us today, this evening, this morning, depending on what part of the world you're from. In today's webinar, what we're going to do is talk a little about what DragonCharts is, but primarily show you how our product is designed to help you profit in the stock market. And first of all, we'll start off by taking a look at our website. What you're looking at here is the DragonCharts website. And what is DragonCharts? Okay, well, DragonCharts is essentially a customizable stock screener that we've developed that enables you to find the strongest stocks in a bull market to buy and the weakest stocks in a bear market to sell short. And it's unique in several ways. First of all, it's unique because it's based on a proven trading strategy, which I'll talk more about in a moment. And it's also customizable, and it's web-based as well. So it saves you hours and hours of time. Instead of looking at the charts of thousands of stocks using technical analysis, we can really cut that down to a matter of minutes by using the DragonCharts stock screener. And we're going to show you tonight essentially how we do that. And basically, for those of you who don't know, what you're looking at here is the website of Morpheus Trading Group. And Morpheus Trading Group is my U.S. company. I started this company 10 years ago, 2002. And this is a strategy where we teach my swing trading strategy for profiting in the U.S. stock markets, both for ETFs and individual stocks. And it's a proven strategy based on what I've been doing, and I've written several books. You can learn more about that on the Morpheus Trading website. My books talk about my strategy as well. On the Morpheus Trading website, we've got our performance listed. If you click on the performance tab, you can see that every stock trade we've ever called in our newsletters, we track the performance of, and you can see the annualized return, 15.8%, is actually compared to the S&P 500 benchmark index. You can see we've got a cumulative return of 109.7%, steadily higher. So notice that our strategy makes money even when the market's going down, as it did in 2008. And this DragonCharts stock screener is based on that proven trading strategy. First of all, I mentioned we have a stock screener, but we also are about education. You can see here, this is our actual video course that we have, the DragonCharts Stock Trading Success video course. It's an 8-part video course where we actually teach our entire strategy that I showed you here at Morpheus Trading. This is the sister company of DragonCharts. We teach that strategy through our video course at DragonCharts. And we teach everything that's proprietary, that we've got 10 years of knowledge here. What type of trade setups we buy, when we sell, even things like the psychology of trading, money management essentials. And this is all available as a separate package. You can see here is $395 for an 8-part video, 8 videos that teach our entire trading strategy. But it's also included with certain membership packages of DragonCharts. So the reason I talk about this is because you need to know that when we look at the stock screener, that it's based on the actual proven trading strategy that I have, and it's also customizable as well. So let's go ahead and dive into the fun stuff, which is taking a look at the actual stock screener and showing you how that works. So for that, we log in. We click on Members Login. I already have my username and password here. Now, for those of you who are currently on your free trial to DragonCharts, you already have access to the software. If you don't have a free trial yet, you can actually click on this button that says Free Trial, and you can register for a free 2-week trial. And when your trial is over, you can become a paying member if you like. So we log in. We click on the Login button. And when we log in, it takes us to the software page. And then to launch the software, we simply scroll down and we hit the button that says Launch Now. And that's it. And it's loaded. This is the DragonCharts stock screener that you're looking at right here. So the idea is that, first of all, notice that there's nothing to download. Our stock screener runs entirely on the web. All you need is an internet connection and a web browser that enables you to use Flash. So it's very easy to use, nothing to download, and has a light impact on your system resources as well. Now, this is not designed to be, before I actually show you what it is, let's talk about what it's not. What it's not designed to be is a technical analysis platform. there's many platforms out there that can do really advanced technical analysis, such as Bollinger Bands and MACD and RSI and all different indicators and drawing on your charts. That's not what this is designed to be. We're not trying to compete as a technical analysis platform. Instead, what it is a stock screener. It's a way to quickly and easily find the best stocks, and then you can actually do more technical analysis on a separate platform if you like. We just have basic technical analysis on here. This is designed to be a stock screener. So, for those of you that are not familiar with it, maybe you're on a free trial and you've not had a chance to use the software yet, I'll walk you through it, and if you already are familiar with it, you'll learn some tips as well. You'll see there's three basic parts to the stock screener. We've got what's called Dragon Scans. We've got a tab we can click on called Self-Serve, and a tab called Indices. And then over here we have a search box. We can type in any symbol, such as IBM, and the stock pops up. You can type in a company name or a ticker symbol, and if you want to look at a chart of that, you simply select it right here, and it would load the chart. And one thing that's unique about DragonCharts is you notice the countries that we covered. It's not only the US, but we currently are focused on the Asian markets. We enable you to actually do screens in Australia, in China, in India, Indonesia, Singapore, and we're adding new exchanges all the time. In fact, Canada is going to be added within the next couple days, as is the Philippines as well. So this is the three different parts. What I'm going to do is do a demonstration here of how each of these three parts work and show you how you can quickly and easily find the best stocks. Now the Dragon Scans, you notice here it's very simple. There's three buttons for scan type: relative strength breakout, four buttons: relative strength breakout, pullback, trend reversal, and short scan. Now what that means is that these are preset scans where we've done all the hard work for you. We've taken the formulas that we use for many years now at Morpheus Trading, when I showed you earlier, to find the stocks that meet our criteria for buying or selling stocks. So for those of you who follow our trading strategy and you've taken the video course, this is a quick and easy way to find the stocks that meet the criteria of exactly what we do. It's a preset. These are preset scans. Whereas the self-serve tab is more customizable, and we'll take a look at that in a little bit. By the way, for those of you, if you have any questions, if you could please just hold your questions till the end of the presentation. I'll be happy to answer your questions, but I can't really answer your questions as I'm doing the presentation, but more than happy to answer them at the end of the presentation here. Okay, so let's start by looking at the Dragon Scans, and we'll do a sample scan here to show you how it works. Let's do a scan for pullback. Now the pullback scan is for finding stocks that are strong but have pulled back over a 2 to 7 day period, pulled back to a level of support. And since the markets around the world are pulling back from their highs over the past couple days, this is a good scan to do. Whereas the relative strength breakout scan shows you stocks that are poised to break out above consolidation. And trend reversal is to help you find stocks that have been in a downtrend for a long time, that have formed a higher low and a higher high, and are reversing their downtrends. And short scan is only to be used in a downtrending market to help you find stocks that are setting up, that have bounced into resistance but are in downtrends. So let's do a pullback scan. Now we can use, and these scans work the same no matter which country you choose, whether you choose Australia or India or Singapore or the US or the Philippines. When we add the Philippines, all the scans work the same. But let's just do the United States, for example. And we select more options. This is optional. We can put a minimum price range or a minimum average daily volume. Now I like to do this because we don't trade stocks that are illiquid, and we don't trade penny stocks either. So what we'll do is drag the slider to a minimum price range of $10, and we'll say no maximum price. Okay, and let's say maximum $500, for example. Okay, and average daily volume, you can slide that all the way down as low as you like, but we like to do a minimum average daily volume of 500,000 shares, so we're not trading stocks that are illiquid. So these are optional. If you don't want to narrow your results down, you can leave these blank, but we like to do a minimum price and average daily volume. And then we hit the button that says Scan Now. And in a matter of seconds, what did it take? About 2 seconds, it returned the results. You can see here 179 results found. And if we want to download these results, we hit this button here, and it'll download to a spreadsheet, which you can then import these stocks into your trading platform. If you use Interactive Brokers or TradeStation, for example, you can import these and you can do further technical analysis or set up alarms or alerts on your trading platform as well. Now, first of all, you have to understand that the number of results you're going to get is dependent on market conditions. In fact, if we do the relative strength breakout scan or the pullback scan right now, we get 100 some results. But just 3 weeks ago, if we did this scan, we got about 20 results. Why? Because the market was in a severe downtrend, so there weren't a lot of stocks with relative strength that were breaking out or stocks that were breaking out and pulling back. So this is an indication that market conditions are improving. There's more stocks now, more results. And we've narrowed down, we've taken thousands and thousands of stocks in the U.S. market and narrowed it down to the 179 stocks that are strong, that are on a pullback. So you've already saved yourself a lot of time. Now, from this point, what you could do is look at the individual charts of each of these stocks. But if you want to narrow it down even further, let's say to just 20 or 30 stocks, I'm going to show you how we can do that with the self-serve scan after we do this. But I just wanted to demonstrate how the pullback scan works, first of all. Now, let's look at the actual results here, what we have. Most of these columns are self-explanatory. It says the country that we're scanning, the ticker symbol, the company name, closing price, the change for the most recent day. And by the way, this is not an intraday scanner. It's not for day traders. This is an end-of-day scanner. So it's designed to do your research outside of market hours, and then when the market opens, you can actually be ready to go with your setups because it's designed for a swing trading strategy. Percentage average volume is a good column. This shows you the volume of the most recent day. How high was that volume compared to its 50-day average volume? So this enables you to find volume spikes, which indicate institutional interest. So for example, we can sort by any of these columns. If we click here, for example, we can see that MDion Incorporated yesterday did 968% of its average volume, nearly 10 times its average volume. So it had a big volume spike. And you can see here all the stocks that traded on above average volume. And then the last column, RS, stands for relative strength. Now this is not RSI. This is not the relative strength indicator. RS is our own proprietary indicator that actually compares how strong the stock is relative to every other stock in the market. So for example, a stock with a relative strength rating of 93% means that it's stronger than 93% of the stocks in the market. So this is calculated going back for a 1-year period. So we're not finding stocks that are strong like today or yesterday. Relative strength shows you the strongest trending stocks for, basically the past year, because the longer a trend has been intact, the more likely that trend is to continue. So we can sort by relative strength if we like, but I like to sort by average volume. And then to look at the stock chart, we simply click on the company name and you'll see that a chart loads up. Now the charts are currently flash-based, so they take a few seconds to load, but we're actually redoing the charts. You can see here that this stock, there's the volume spike. We can see yesterday it did 10 times its average volume. You can see the volume spike. But this stock looks like it's an acquisition because it's been trading in a tight range, so that's not one we'd really be interested in. But one stock I do know that is a good result here is STMP, stamps.com. And this is a good indication of how the pullback scan works. If we take a look at the 6-month chart, for example, notice how 3 days ago the stock broke out, this big candle here, and on big volume, about 5 times its average volume. And then yesterday, over the past 2 days, it's pulled back. So this is a good example of how the pullback scan works. We found stocks that broke out that are on a pullback. Okay. Another example, because I looked at this list ahead of time just to save time, another example here is ULTA. This is a good example, because ULTA also has broken out recently, and now it's on a pullback. And actually, notice how the stock is about ready to break out after this slight pullback. It's got a nice tight basic consolidation right here, and the stock is poised to break out above horizontal price resistance. In fact, if it gets above essentially yesterday's high, it's in play as a potential breakout. Now, just to find those two stocks right there, STMP and ULTA, that alone, for example, would have taken us hours and hours just to find that. But we were able to narrow down the results very quickly by doing a pullback scan. And we can also sort. There's one stock in particular that I wanted to show you, and I don't know if can't recall if it was on our pullback scan or our relative strength breakout scan, but it's RDEN. Okay, that was on a different scan I'm going to show you. Okay, and so essentially that's how the Dragon scans work. You saw the pullback scan works. Relative strength breakout If we do that scan, okay, we're going to get 182 results found. Now, if we want to narrow our list down, we could say, let's say the minimum average daily volume must be 1 million shares. So that's going to narrow our results down because we're doing a higher minimum average daily volume. Now we have 132 results found. Okay, and we could again sort by volume, and we see some of the same stocks here. We could also sort by relative strength, 99%. These are going to be some of the strongest stocks in the market. Now, the relative strength breakout is only going to work for stocks that are at least been trading a year. Okay, and if we look at, for example, if we go through most of these, you're going to see there are stocks that are all trading near their highs. Okay, and perhaps they're on a pullback as well. You notice that RDEN was one of the stocks I want to show you as well. Now, in a case like this, you get a stock that was acquired, it gapped up, and then trades in a sideways range. That's going to come up on our list because it's technically has relative strength, but it's not something you would trade because it was an acquisition. Again, this is just a real quick way to find the strongest stocks that are in an uptrend. Now, realize that this is all relative to market conditions. If the market's in a downtrend, as it has been, a stock could have a 99% relative strength rating and still be in a downtrend because it just means it's stronger than all the other stocks in the market. But anyway, let's go to the self-serve list. And I want to show you here on the self-serve how that works. Okay, on the self-serve list, you notice there's more criteria. On the Dragon scans, they're preset scans that I showed you. On the self-serve list, it again is based on our trading strategy of finding stocks of relative strength to the market to buy or relative weakness to sell short, but it's more customizable. So again, if we, let's just use the US market as an example, we can select which exchange we want or even just ETFs if we like, but we'll leave that on all. And let me show you a scan that I like to do. A quick and easy way to find the strongest stocks in the market is these are moving average criteria. So what you're selecting here with this slider is, do you want the price, the current price of the stock to be above or below the actual, moving average? So for example, if we do it this way, we can select which period we want, 20-day, 50-day, 150-day, 200-day, or just turn it off altogether. We use the 20-day, 50-day, and 200-day moving averages. The 20-day exponential moving average is a short-term indicator of trend. 50-day is an intermediate-term indicator of trend, and 200-day is a long-term indicator of trend. So we're saying that we want the stock price to be above the 20, the 50, and the 200-day moving averages. Sure, Vicky, I'll do India after I do the U.S. It works the same way. And then what we could select is we can do a minimum price range. Again, let's say we do a minimum price of $10 and a minimum average daily volume of 500,000 shares. And then we can select a relative strength ranking of, let's just select 90 to 100. So these are going to be the strongest stocks. All these stocks are going to be in the top 10% of strongest stocks in the market and above their 20, their 50, and their 200-day moving averages. These are going to be stocks that are trending higher, that are in an uptrend. And we get 154 results found. Okay, now if we want to narrow that list down even more, we can go up to, let's say, 95% for relative strength. And now we're down to 95 results. So that's a way of filtering it out, or we can increase our minimum average daily volume. It's very customizable in what you do. Let me show you here. This is going to be, a lot of these stocks are going to be the same ones that are showing up on the relative strength breakout scan. Okay, because these are stocks that all have relative strength. And if we take a look here, just looking randomly at the stocks that are returned, you'll see that these are all going to be stocks above all three moving averages, and they've got relative strength. Okay, like ADS, for example, just broke out, and actually now it's on a pullback to support of its breakout level right there. So that's a potential buy entry. Finding these strong stocks would take you a lot of time if you were doing it manually. And again, you can go through the list. You're saving research time is essentially what you're doing here. Okay, DLTR, Dollar Tree, for example. Notice here how it's consolidating at the highs. Really nice pattern. Consolidating at the highs in a tight sideways range. again, meets our criteria for a strongly trending stock. Considering that the main stock market indexes are still well off their highs, we've got stocks that are at their highs. Now, one scan I'd like to do here is, let's modify this scan a little bit. Let's say we want the stock to be no more than 3% above its 20-day moving average. Now what I've done here is I've said the stock has to be above its 50 and its 200-day moving average. I still have the relative strength ranking above 90, but I'm saying the stock can't be more than 3% above its 20-day moving average. So if you think about that, visualize that, what that's going to show us is stocks that are trending higher, but they've pulled back and they're trading near their 20-day moving averages. So we hit the Scan Now button. Notice there's 53 stocks that are found. We could even narrow it down more. We increase our relative strength ranking. Now we've got 31 results. Now this is exciting because now we've got 31 stocks that are strong that are on a pullback to within 3% of their 20-day exponential moving average. And if you take a look at some of these, just at random, you can click on a bunch of symbols. You'll see very similar. Here you go. Here's a stock, PNM Resources, broke out in mid-September, been trending higher, and yesterday it gapped down to right down to its 20-day moving average, which happens to coincide with support of this prior breakout level. So there you've got another play. Just clicking on a stock on random, we've got a play that's a strong stock that's on a pullback. And these are all going to be similar. Here again, a stock that's broken out. It's pulled back to within 3% of its 20-day moving average. And in a weak market, you could do, if we were in a weak market and you wanted to find short candidates, you could just do the opposite. You can say the price must be below the 200-day moving average, at or below the 200-day moving average. And you could say it must be at or below the 50-day moving average. And you could actually say, all right, well, let's say we want it to be within 8% above or 8% below the 20-day moving average. And we'll turn off the relative strength ranking because now we're looking for weak stocks. And we get 238 results. Notice there's more stocks that are below their 20 and 50-day, or I'm sorry, more stocks that are below their 50 and 200-day moving averages than there are stocks above. That means we're still in a weak market overall. And now notice the relative strength ranking of these stocks are pretty low because these are weak stocks. Now take a look here. You'll find the opposite. These are stocks that are going to be in a downtrend. You see, below their 20, their 50, and their 200-day moving averages. So if the market starts heading back down, we can do a scan like this to find weak stocks. Here's a stock that failed to break out and looks like it's about ready to roll over. I'm just clicking on random symbols here to demonstrate. Here again, the stock that's in a downtrend, it's bounced. It's right at its 50-day moving average. If the market resumes its weakness, this will resume its downtrend. So the self-serve scan, again, is the point of the self-serve scan is you can actually take your own trading strategy and customize using the self-serve scan. Notice that we keep our strategy very simple. It's based on price, volume, moving averages, relative strength. There's another indicator here. Where is the closing price relative to the 52-week high? Okay, stocks that are trading at new 52-week highs generally are the strongest stocks in the market because there's no overhead resistance. So these will be the stocks that continue higher. And if we just, for example, just simply do a scan for stocks, let's say we want stocks with a relative strength rating of 90 or above and within 5% of their 52-week highs, we get a list of 45 stocks. All these stocks are going to be trading at or within 5% of their 52-week highs. So these, in a strong market, 52-week highs are great stocks to buy. Now this is one that's on a pullback. This is a stock that I saw earlier when I was doing my scanning. Arden, Elizabeth Arden. This was on a pullback scan that I did earlier. This is a nice type of setup also where you can see the stock has broken out. Broke out above this downtrend line a few weeks ago, and now, just yesterday, it pulled back to undercut the 20-day moving average, and it's right at new support of this breakout level. A prior level of resistance becomes the new support once the resistance is broken. So if it gets above yesterday's high in today's session, that's a buy entry, a pullback buy entry. We could do the same on any exchange. I believe Vicky had asked us to do India, so we can do the same scan on India. Let's say we want to find stocks in the National Stock Exchange. And let's say we want the stocks to be above their 20, their 50, and their 200-day moving averages. We'll do that first scan that we did earlier. This will show us the strongest stocks in the Indian market. And we can select a relative strength ranking of 90 or above. And we can put in a minimum average daily volume of 100,000 shares. We hit scan now. And there's 16 results found. Oh, look at this. Bata India Limited is actually one stock that we've, in our daily videos that we send out to our members, this is one stock that we're actually in. For those of you who are on your free trials, you probably actually saw today in our video that this is a stock that we bought recently when it broke out. Bata India. And I'll show you why this comes up as relative strength. Notice here that the stock has broken out and it's consolidating right at its 52-week high. Trading right at its 52-week high. And Varun Industries is another one. It's strong. There again, you can see a stock that's at its 52-week high. And just to compare here, we can actually look at indexes too. We can look at, for example, if we go to indices, this will let us look at the indexes. India, for example, we can select the Sensex index, which is one of the benchmark indexes like the Dow in the US. And notice here, if we look at the Sensex index, you'll see that the index has recently broken out above horizontal price resistance here, and then it's pulled back to new support of this resistance. So any of these stocks that we saw, notice how the stocks we found were actually at 52-week highs, while the benchmark index, if you look at the 1-year chart, it's well off its 52-week highs, well off its highs. So any stock that's at its 52-week highs, while the broad market is off its 52-week highs, is going to be a stock that is going to be the first one to move higher when the broad market does. For example, another stock that we found with a relative strength breakout scan recently was Arvind Limited. Okay, look at Arvind Limited. It's an Indian stock here, trading at its 52-week high, above all of its moving averages. Nice tight consolidation here. And again, we found this stock with the relative strength breakout scan we recently did. So the point is, it doesn't matter which exchange you do. I mean, those scans work the same. And currently we cover, what makes DragonCharts unique is that in the US there are already some stock screeners, none that are quite customized to a trading strategy. But we actually cover in some of the markets where there is no technology like this: Indonesia, Singapore, India. So it's very unique in these regions. Okay, so in a nutshell, that's basically how it works. This is not a stock analysis session, so we're not going to look at individual chart patterns and give free picks. I mean, obviously, our subscribers and our paying members actually do get videos where we actually do give specific trades that we like from our scans. That's part of the service that we give. But in the webinar here, the purpose is just to demonstrate how the screener works and how it can help you very quickly and easily find the strongest stocks to buy in a bull market or the weakest stocks to sell short in a bear market. Again, based on a actual trading strategy that we do. Going back to the DragonCharts website, I wanted to just again show you that some of you, if you're a Diamond member, you've already received access to our video course. And this video course teaches you the trading strategy that we've been using at Morpheus Trading, which I showed you here, which has this proven track record over the past 10 years. We teach this in our video course. Once you've taken the video course, then the scans, the Dragon scans, are designed to find those plays for you that meet the criteria. So it's not just a screener we sell, it's a whole package, it's a whole strategy. We have the education combined with the screener, and then we have the daily videos that come out as well. Actually, some of the markets it's not daily, some of them it's 1 or 2 times a week, but other markets it's daily. So it's a whole strategy. Now, as far as DragonCharts goes, if you're already on a free trial, your trial will probably end soon because you only get a free 2-week trial. To continue with DragonCharts, you click on the free trial button and you scroll down to the bottom and it says here, already had your free trial. Choose one of our subscription packages below. You just click on this button here. You enter your information, hit next, and then you'll enter your credit card or debit card details and you'll be all set as a paying member. Now, if you're already on a free trial, you have to pick a new username and then pick a new username and password. and you'll be automatically granted access. If you've not yet had a free trial, you can sign up for a free trial right on our homepage. Just fill in the box here and hit sign up, and you'll get access automatically to the screener. You can check it out, see how you like it. We also have, for our members, every week we have live Q&A sessions, webinars where we answer all your questions, give you personal attention to help you get the most out of the screener. So there you go. That's basically all I have to go over with you today. At this point, I would like to open up to any questions. If anybody has any questions about the screener or our services or our video courses or our strategy, you can go ahead and post them. I'm not going to look at individual stock patterns. It's not a stock analysis session, but I'll be happy to answer any questions about our screens or the software or anything like that. I'm scrolling up here because I saw that PK asked me a question earlier. PK asked me, is the trend reversal screener tool on this website for reversal of uptrend or downtrend? The trend reversal you're referring to, I assume, on the Dragon scans, right? This button right here, trend reversal. That's for finding stocks that were in a downtrend that have reversed their downtrend. So it's this actual screen, trend reversal, is only to be used when a market such as the Indian market has been in a downtrend for 8 months or longer, and it's to help you find stocks that actually are forming a higher high and a higher low. So it's actually for downtrending stocks that are reversing higher. Now the short scan would be the opposite. The short scan is stocks that were in an uptrend that have reversed their trend. So that's the difference there between those two. Let me scroll down and see if there's any other questions here. Okay, Thor was asking me a question. Let me go ahead and scroll up. I'll just answer the questions in the order they were received. Thor said, are the other MAs in the scan working and just the 20, 50, 200? Yeah, we actually have, for the moving averages, right now we have it set that you can pick 10-day, 20-day, 50-day, 150-day, or 200-day. Just to keep it simple, we actually narrowed it to just 5 different moving averages, just for simplicity. We really believe in keeping it simple. There's a lot of screeners out there that in the U.S. that are so complicated, the learning curve is so high, and so we decided to keep ours very simple, so that literally within a matter of an hour you can be up and running on this. So you get the 10, 20, 50, 150-day, or 200-day. You can choose any of these, and simple moving average or exponential moving average. So I assume that's what your question was there. It's okay. PK said no tool for screen retracement, bounce up of stock and downtrend for further shorting. Actually, yeah, PK, that's actually what you can do with this scan here to find the stocks that are in a downtrend that are bouncing. That's actually the way you would do that scan is like this. Use the self-serve, and let's say you want stocks that are below their 50 and their 200-day moving averages. That's going to show you stocks that are in a downtrend, for example, in an intermediate term and long-term downtrend. But then you want a stock that's within, let's say, within 5% of its 20-day moving average, either 5% above or 5% below. So that's going to show you a stock that is in an intermediate and long-term downtrend, but in the short term it's on a bounce. That's what that's going to show you. And we hit the Scan Now button. Let's see what results we get for that. Okay, 70 stocks come up. And let's take a look at, we can show you how you can do that scan. That one doesn't meet our criteria because it's been in a sideways range. And we could also add in a relative strength criteria to make sure the stock is weak. Okay, here's a stock that's bouncing off its lows a little bit. And actually the pullback, or the short scan, does the same thing. I'll show you that one in a minute too. Let's look at the short scan. Got 218 results. Let's narrow it down with a minimum average daily volume requirement. 200,000 shares, let's say. Okay, 37 results. There we go. This is on the short scan. Let's see what comes up on the short scan. This is the preset scan for stocks that are poised to sell short. Okay, here again we have a stock that's bounced off its lows. Okay, it's in a long-term downtrend. We can draw the trend line, but it's bounced. Now right now you're not going to find a lot of stocks like this because a lot of stocks are actually reversing their trend. So this scan is going to work better when you're in a very weak market. And the number of results you get with the full serve scans is going to tell you a lot about the state of the market as well. Okay, here's a good example. INFI. Look at the 1-year chart. You can see on the 1-year chart it's in a long-term downtrend. And notice that the stock actually just 4 days ago rallied right into the downtrend line. And now it's drifting lower. It's back to its 200-day MA. So we found a stock that's in a long-term downtrend and it's bouncing. Nice bounce off the lows there. Okay, and there was only 30 some stocks returned, so I mean we would be able to go through all those in a matter of 10 minutes, 15 minutes, and you would find out of those you want to find the best candidates. You'd find the top 2 or 3 stocks that meet the criteria you're looking for. Another one is TSC, or I'm sorry, TCS. This is another stock I happen to know is TCS, Tata Consulting in the National Stock Exchange. This is a similar example to the INFI that I just showed you. You take a look at this one, real similar deal. If you look at the 1-year chart, you can see that it's been in a downtrend for a long time, and just recently ran into resistance of its downtrend line, and look what happened the very next day. It gapped down, big gap down, and then it drifted back up but formed a lower high, and now it's coming back down again. We actually found this stock. This was a stock in our daily videos that we were short, and we found it through doing the short scan, finding a stock that was bouncing off its lows. Thor, good question. Thor is asking, how do you routinely narrow down the scan list to just a few tradable stocks? Is there any other technical indicators you use to get the list down? Thor, there's a couple of schools of thought on this. I mean, I like to get the list down to about 100 stocks, and from there I like to look through those manually and see which ones meet my strict criteria that I use for trading. 100 stocks I can go through in an hour. I don't mind spending an hour of time to research, but if you wanted to narrow it down even more, one of the best ways to narrow it down, and of course it depends on the market you trade too. I mean, with the U.S., there's a lot of stocks in the U.S. market, so some of these scans are going to return 100 results. But if you're trading like the Singapore market, for example, most of the scans are going to give you like the top 5 or 10 stocks. But yeah, to narrow it down, a couple of other indicators you can use. Let me demonstrate, for example. Let's find stocks that are above their 20, their 50, and their 200-day moving averages. Okay, and we'll go back to do the scan we did earlier, and I'll demonstrate. Okay, relative strength rating, let's say 90 to 100 in the U.S. market. Okay, and when we did this scan earlier, 217 results. Now let's say we want to chop that down. Okay, well, one thing we can do is we can increase the minimum average daily volume. So you can increase that to, let's say, 1 million shares a day, because I like to trade stocks that are liquid. Now you're down to 143 stocks. And now if you want stocks that are, again, we're looking for strength, let's add on the close versus 52-week high. Let's say the stock must be within 10% of its 52-week high. Let's see how that narrows it down. Now we've narrowed it down to 84 results. Let's say we want it within 5% of its 52-week high. Notice how quick this is. Okay, it's just literally seconds. 47 results now. We could increase our relative strength rating to 95 or better. Scan now. 25 results. We could put a minimum price range in of $10 a share so that we're not trading penny stocks. And now we got 23 results. And we're with our moving averages right now, we're just saying the stock must be above all 3 moving averages. But let's say this doesn't tell us how high above the moving averages it could be. It could be well above those moving averages. So let's say we want something that's no more than, let's say, 5% above its 20-day moving average. Because if it's much more than 5% above, then you're probably going to run into this situation where the stock is, overbought in the near term. So let's see what that does. 15 results. So we just went from 217 stocks down to 15 results. Okay, so these are going to be the strongest stocks that are near their 50-day moving averages. And we looked at some of these earlier already. ULTA was one of them that was on our list that we liked. That was a nice setup. I mean, as the S&P and the Nasdaq are in a downtrend and struggling to move higher, ULTA has been in a nice consolidation pattern. Okay, so you can see here this is a potential breakout play above this resistance level. TSCO is another one. So I mean, 15 stocks you can go through in a matter of minutes. There's another stock that's trending, near its highs. These are going to be the strongest stocks in the market right now, and these will be the first stocks to rocket higher if market conditions improve. Look at Starbucks. This is nice too. This would be on our pullback scan. Just broke out above a long-term consolidation, and now it's pulled back to its 20-day moving average. Very low risk, good risk-reward entry. Put a stop just below the low of this consolidation. So, that's just to give you an idea, Thor, of how we can narrow down the list. Okay, great. I think I've answered everyone's questions. Does anyone else have any other questions? If there's any other questions, feel free to type them in the chat box. If you do think of any other questions later, feel free to email me. I'm posting my email address for you. It's darren@dragoncharts.com. Be happy to answer any questions. Again, remember, it's not only a stock screener, but it's a stock screener that's tied to a proven trading strategy. So I encourage you, if you use the screener, to also make sure you get our video course as well, so you can learn exactly our strategy that's given results like this, like you see right here, steadily higher even when the market's in a downtrending environment. And by the way, one last thing, we do trade real money. A lot of guys out there that teach you how to trade don't actually trade real money. We have a hedge fund. We've been trading real money now for 8 years, a small hedge fund. So we put our money where our mouth is, and we've designed this strategy around our actual trading results with real money. Great. Well, thanks for coming, everybody, and just email me if you have any questions, and look forward to you becoming a member and taking advantage of our promotion. Again, you just click on free trial, and then you just scroll down